Are you wondering whether you need to designate as an S corporation for tax purposes? I'm going to tell you all about it in today's video. So first off, what is an S corp? An S corp or an S corporation is really just a subchapter of the IRS tax code. Sometimes it's also called a small business corporation, but for all intents and purposes in this video, we're going to call it an S corp. An S corporation is a special tax status that's granted by the IRS that allows you to pass all of your income credits and deductions onto your business's shareholders in that S corporation. And if you're a solopreneur, you're probably the only shareholder. So that's why this is a really simple way to ensure that you're saving on your tax liability as a business at the end of the year. And generally speaking, S corporations do not double pay for taxes. So a C corporation pays double taxes, the corporation itself pays taxes, and then all of its shareholders and all of its employees pay their own payroll taxes as well. So the S corporation, all of that income would pass through to its shareholders, and then the shareholders would be taxed. And if you are the only shareholder in your S corporation, then you're going to save a lot on self-employment taxes. And let me explain why. So for simplicity purposes, I like to explain this by just using even round numbers. If you are just an LLC, a limited liability company, or you're just a sole proprietorship as a single owned business owner, then you're really going to pay your self-employment FICA taxes on everything you earn. So if you were to earn $100,000 in net profit, you would be taxed for self-employment purposes that 15.3-ish%, it can change and vary ever so slightly. You're going to be taxed that self-employment rate on all $100,000 of your net profit. But if you're an S corporation, you can designate a reasonable salary, and I'll explain that in a little bit, to yourself, and you'd pay yourself from your S corporation. You're essentially putting yourself on payroll, and say you only make $60,000 of that as your actual take-home pay. Then you would only be charged that self-employment taxes on the $60,000. So you can see here that extra $40,000 that you'd be taxed 15% for self-employment purposes would not be taxed. So you're saving thousands of dollars essentially. This is why many solopreneurs opt to be elected as an S corporation through the IRS. And this is just a federal thing that you do, and you'd file a form through the IRS. So let me take you through that process. So step number one, and a lot of people get this wrong, is you also still need to be a business entity that's registered with your state. An S corporation is just a tax designation. It's not an actual business entity. So you want to make sure you're registered as a limited liability company in your state. And we have a video all about this. I'll link it here below if you need to know how to file as an LLC. Step number two is you need to designate through the IRS as becoming an S corporation for tax purposes. You will file a Form 2553 with the IRS. And the one thing to note here is that if you've already been in business, you need to do this usually by March 15th. It's 2 months and 15 days from the beginning of the tax year that you want to designate as an S corporation. So, for example, in 2021, if you want to be an S corporation, you have to file by March 15th, 2021 to be designated as an S corporation for the entirety of this year, or you have to wait till next year. The only caveat to this is if you are a new business, you can really do it at any time and it would retroactively to apply to that year. So if you became a business in say July or August, you would still have about 75 days to file your Form 2553 to designate as an S corporation for that year. Step number three is you need to put yourself on salary. So you have to have some type of payroll system, whether you hire that out or you do it yourself via QuickBooks or other platforms, and then you're going to pay yourself a salary. Usually I suggest you do this monthly to make it as simple as possible. And I'm sure you're wondering what a reasonable salary is. This is the gray area of S corporations, and it can vary. So some accountants may say that you need to become an S corporation if you're making $30,000 or $40,000 of net profit. I don't really agree with that because as an attorney, that would be very hard to argue with the IRS that $30,000 or $40,000 is a median reasonable salary for what you do. I usually say if you make around $50,000, $60,000 and upwards, that's a good reasonable salary that people would get paid. Of course, this depends on your location and the type of business that you own. So just ensure that you can justify that is an actual good salary for what you do. So you'd split that up into 12 payments, that total amount. You put yourself on payroll. You do have to pay, of course, self-employment taxes, and your business is going to compensate. Of course, they're going to pay some of your taxes, federal and state, and then you're going to pay some of your taxes out of your paycheck every month. But again, usually that is going to be overcompensated by the amount that you're going to save by not paying that self-employment taxes on the entire profit of your business. So for some people, it's really important to go check with a CPA, certified public accountant, and a lawyer to ensure that you are going to benefit from setting up and designating as an S corporation. I always suggest you don't do this on your own. You definitely need to get a CPA to help you with this, and they'll be able to tell you, yes, it's totally worth it. They have all kinds of programs. They can run the numbers for you. The last thing to be aware of with an S corporation, why it's really important to go talk to an accountant about this, is there's some deduction changes that would happen on your tax liability at the end of every year. So S corporations, you actually have to reduce your taxable income prior to the year's end for things like rent and car usage. If you're just a solo LLC member, you're probably just going to do that when you file your taxes. You're going to use, a depreciation schedule or the mileage that you've used on your car for your business purposes. And usually you can take a home office deduction. But if you're an S corporation, you actually have to pay yourself some type of office rent as a standard deduction for your net profits prior to the year's end. If you want to learn more about the differences between all of the business structures and tax designations like a sole proprietorship, LLC, and filing as an S corporation through the IRS, you can find out a lot more on the blogs at thelegalpaige.com, and we have additional podcast resources on this as well that I'll be linked below. There's no coffee in here.